get started. So this is day 8 of the boot camp, and in this day, we focus on the secrets of nature in Forex trading and how what people are used to seeing outside of trading affects trading. So this is day 8. So you may ask, how does nature play a part when it comes to knowing and understanding the markets? Well, if you really think about what the markets are, it's basically a chart visual interpretation of people's behavior. And what influences behavior? Stimulus influence behavior. So things that create reactions influence behavior. And if you think about how a person is developed and how a person in regular society, like their personality, it comes from how they've been influenced, and how they've been influenced is based off of what they're used to seeing. So like, if one person comes from a certain neighborhood, he's going to be influenced by that neighborhood because there's certain things that he or she is used to seeing. If your favorite color is blue, then everywhere you see a shade of blue, you're going to pay extra attention to it because that's your favorite color. It creates a reaction when you see it. It creates a positive reaction. Well, trading has that same aspect to it. And now you may ask, what is the nature part of trading? Well, if you think about anything that's natural, it's in harmony, and they fit together, and things are made to build into one another in nature. So one aspect of trading that's very, I guess, natural to the eye and natural to how people react to things, and that you can use it to create a natural, I guess, interpretation of the charts to where it's not hard for you to understand what's going on. One aspect of trading has to do with this right here. So this right here is what's called a Fibonacci sequence. And this Fibonacci sequence is a mathematical sequence that is a mathematical code that's in alignment. Like you think of other mathematical codes like pi, with the circle, like the circumference and stuff like that. Well, Fibonacci is a multiplication sequence, an arithmetic sequence that a lot of things in nature are built off of. And you may look at this shape and, what does this shape remind you of? When you look at this shape, what things in nature remind you of this shape? Well, one thing would be a galaxy, a hurricane, a snail's shell, a constellation, a pine cone, plants, the way certain animals are built, flower beds, flowers. So a lot of things in nature are in alignment with this aspect of life, this aspect of how different things are built, your ears. So you're subconsciously in alignment when you see, like you're visually in alignment when you see shapes or things that follow that aspect. A baby, a fetus, different things, vines grow in a Fibonacci sequence. So you see all these different aspects, you know, I forgot what they call them, but you know what this is, it slipped my mind. But all these different things, you know, a snowflake, the list just goes on and on. And you're probably looking at this and wondering like, wow, I'm so used to this shape. But at the same time, I've never known that was the same shape, but you've seen it over and over again. And when you see it, your eyes automatically deem it as natural. You see the waves, you see, you know, roots, you know, leaves, they grow. This is a different Fibonacci sequence, um, a different one where it create like branches, like lightning would be another one of this Fibonacci sequence where like you create that natural branch. Your nerves in your body are built just like this. Your fingerprint, that has the Fibonacci spiral sequence. Your lungs, it's a different Fibonacci sequence, not the spiral. So all these different things in nature are running off of the same ratio, the same set of numbers, the same blueprint. Well, in trading, that is also true. So if we go back to our charts, if Fibonacci is based off of, it's a golden ratio. So when things are used or built or painted within this ratio, is deemed as beautiful. Another thing that was painted with the Fibonacci, so Fibonacci paintings. You may notice some of these paintings. The Mona Lisa was painted in a Fibonacci alignment. And that's why it's deemed as a beautiful painting. Because you may look at it, it's like, okay, it's not visually stunning, but something about it makes it appealing to you because it was painted in this way. Other paintings that were painted using that structure. Different famous paintings use that same structure. So now that now that you know that you're used to seeing the structure, watch what happens when you become aware of it on the charts. So if we go back here. So you may notice some of the Fibonacci, well, let me do the ratios, Fibonacci ratios. You may notice some of them. That's too blurry. So right, where is it at? So basically with this, you don't try to memorize this. I'm just showing you how things line up in the markets. So 62, you know, this 25, they rounded up on these. But let's go back to the charts. Let me show you what. Let me make sure. I think it was also here too when I learned it. So yeah, see the 61.8, the 1618, the reverse of that is a 38.2. That's when you reverse it. So now that we look at, you know, if the 61 and the 38.2 are two of the more significant Fibonacci ratios, now let's look at the chart using those two points. So let me just focus on those two. So 1618, 38.2. And there we go. and the negative components. There. So let's build this up. Now we got that going. Watch what happens when I use just any one move. From the top, you want to take, when you're doing Fibonacci, if you're looking for downtrends, you're going to start from the top and go to the bottom. Now watch what happens. This one hasn't fulfilled it yet. Oh, yes, it did. So over here, and with Fibonacci, sometimes the market gets real close and moves it away just so it can keep traders from trading that particular number. But you see here that as soon as it came back to that area, that it was a reaction off of it. But then also here, this 38.2 is respected as a zone. Now let me use the other components of the Fibonacci. So that would be this one. So the whole like if you use it on MetaTrader or TradingView, this is the regular scale. So you see how price falls within and does reactions off of those points. Or if it breaks it, it takes, just like what we said in our last lesson, it takes a strong momentum to break those points. But you see how you're getting perfect touches on these levels. Even now, there's a reaction coming from the 23.6 based off a level of Fibonacci that I drew back here. You know, it works in a lot of different markets. If we go to Bitcoin, let's go to Bitcoin. Let's go big large scale. Let's go large scale. So the famous 2017 run, right? The famous 2017 run. So if we start Fibonacci from right here, and let me add the Fibonacci extensions, watch what happens. This is how powerful Fibonacci is to the human, I guess, to the human intellect or visual. I have to create it. So negative 8, negative, what's the other one? 90.2. So these are major Fibonacci extension zones. -1. All right. And then -1618. So the whole point of Fibonacci is to take it from the bottom of a swing move to the top of a swing move. So let's line it up. So you see how, you see how I did the Fibonacci from here to here. And the top of the entire reversal was perfectly off the -1618. How, you've seen that before, right? The 1618 is the negative function of it. So the negatives are used for the extension. So the -1618 is such a powerful psychological number of alignment that the famous 2017 run was measured out perfectly using Fibonacci extensions. Now let's go further on. So that's from 2017. Let's go back. The low, so let's look here. Let's look here. Check this out. The lowest point after that run was what? The lowest point in all of Fibonacci, of all of the, I guess, all of the bear market following the famous 2017 bull run with Bitcoin, retraced off the 61.8 to the T, retraced off of that. Look what else was respected. The 2020 coronavirus crash rejected off of the 38.2, rejected off of the 38.2 from the Fibonacci that I drew for 2017. If that's not enough, look what happens here. The first bull run after the crash stopped at the 0.61.8, rejected off of there before continuing its move. And we can literally keep going. Watch this. Watch how crazy this gets. Let me see if I can guess which Fibonacci the current all-time high is. 0.3618. Nope, not high enough. Like, this gets really on the advanced side of Fibonacci, but I want to show you how powerful these ratios are. Still not high enough. Great touch, great reaction from January. That first part of the 2020, the first end of the 2020 bull run, rejected off of that perfectly. Let's keep going. 6. Is anybody getting some mind blown moments? Look at that. The 6618 was the top of it, but watch this. Let me use the one after that. Let's do here. So -6. No, it'd be 7. 27. $738.2. This is like going way in extension. 738.2. Just keep, and this is fun when you really just play with this, right? The 7618 was a perfect touch. See how powerful that is? So basically, the Fibonacci from 2017, if you extend it far enough, you will find the all-time high being respected off of a Fibonacci point. From one Fibonacci point back in 2017 to another Fibonacci extension point using the same Fibonacci indicator that was drawn for 2017, having a perfect touch on the 2021 all-time high. So basically, and then as far as like in your MetaTrader, you can go, I can show you how to do that. It's using the same Fibonacci retracement, and then you would just click on it and go to properties. I'll show you that in just a second. But all I'm doing is I'm taking, it's just mathematics. So all I'm doing is I'm taking the golden ratio, that's 61.8, and I'm just going up one level. Like, so when I was going 5, 6, 7, I'm just going up one level of the Fibonacci. But I'm still using this number. The three main numbers is 27, 38.2, and 61.8. When it comes, especially when it comes to extending out the Fibonacci. So now that you know how valid Fibonacci is, let me show you how to break it down from live charting perspectives. So let's pick another, let's do gold this time. Let's do gold. Let's switch out the Fibonacci for the regular one. Don't need all those. All right, there we go. Okay. So let's go a little bit more recent. Let's look at where the markets are now. So we're going to take this entire July, or half of this July, and when you're doing Fibonacci, you're going from, like if you're looking at an up move, you're going to draw the Fibonacci from the bottom of the leg to the top. And you see that move there. Now, what you want to look for, this may be a little bit more long-term swing traders, but I'm going to show you how to look at the chart and really determine what you look for. So now that you have the Fibonacci up, what you want to see is what levels are respected the most in this Fibonacci sequence. And if I extend it back so you can see. So what, like using the price hotspot theory, the price hotspot mindset when it comes to your analysis, as far as looking for those price levels, which Fibonacci is the strongest price level? And the way that you would determine that is the same rules as when you're looking for like support resistance, price levels, high spots, where you're looking for those respects here. So let me draw them out so you can see it. So you got this reaction here, this strong candle that broke that reaction, this respect here, got this area here, you got this one, and that was slightly outside what I like to consider as an exception, but I'll point that out so you can, pay attention to it. So that's for the 5, the 50%. Let's look at the 61.8. So if I bring it back so you can look at it with past data, the 61.8 is somewhat strong, but it's not a stronger level than the 50. And this is, as soon as you use Fibonacci, this is the default settings of Fibonacci. So if you use the Fibonacci retracement tool, it'll look like this on TradingView, MetaTrader. It's going to look like that same little bar, so those levels. This is what'll come up, these exact numbers. So you have this number here, the 50, which is the strongest. And then if we were to determine a second strongest level, it would be the 23.6. But me personally, I don't trade 23.6 retracements. Like especially when it comes to bigger moves. Like that's not one that I use a lot. I do like all the other ones. So if we disregard the 23.6 and look at another candidate, then this line would be the other candidate because you got this here, got that here, strong candle break. So like if you have a strong candle that breaks level, that also validates the level because now it took a strong candle to break it. So these levels here. So that would be another lesson. with the indicators. But, if you're good with it, you can kind of see, I guess, the range of the market. Like if it's overbought, oversold, or in a high or low range of that market. But if you use what we've learned up to this point, you'll know when it's time. So we know about price hotspots. So we got this level. This level has been identified as a strong price hotspot. And this level has been identified as a price hotspot for Fibonacci. So if we take it off, now we got these zones here. These are the zones we're going to play on when price starts to show a reaction in these zones. What is a reaction? Reactions in day 3, candlesticks. Looking at those candlesticks. Now we go a little bit lower so you can see more candlesticks. So you got the engulfing candle there. You got your hammer, your dojis happening here. So when you start to see that combination of stuff, your dojis, your wicks, your strong wicks, all these different candlesticks that play a part into determining what's happening in the market, when you see it in those areas, it's more valid. So the combination of, identifying where those sweet spot zones are, confirming it with the Fibonacci, and then when you're actually placing your trade, waiting for one of these candlestick reactions to happen in that area to really place your trade and, find profitable zones. So if I'm looking at the markets here, if I'm looking at the markets in this point, what I could be looking for is either a reaction where I get like a candle with a doji like that. Then I get a strong candle to react off of it. That's not working. Or I get a strong candle to react off of it like that after the doji. Or if it happens to break, I want to see a strong candle break it. Nice strong candle. Doesn't have to be like really large, but it has to be decisive. Like you don't want to see large wicks both sides when you see this candle. You want to see a lot of body in that candle. And then after that candle, maybe look for some form of retest. So some form of retest here. And then you would look for your continuation down. So you either got this to go up or this to go down. But you know where you're playing at. You know what your zone is. You know where your level is because you already previously identified that level. So that's one aspect of it. So like even if we look at the last move that it's been making, we take the Fibonacci on the down move here. We take the Fibonacci on the down move. And you kind of identify where your strongest point is in the whole move. You do the same thing over again. Like if you want to kind of, sniper it, get real precise, you'll do it on the bigger time frame, and then you go down to like one of the smaller time frames, whether it's the 30-minute or the 1 hour or the 15-minute, whichever one you like to trade on. So we got this down move here. We're looking for a continuation of the down move because we already know it's a downtrend because of what we learned previously. Like everything is being, stacked on top of each other as far as aligning your analysis. So we know that that uptrend is higher highs and higher lows, and we see a downtrend is lower lows and lower highs. So in this moment in time, you have your lower low, your lower high, your lower low, your lower high, your lower low. One thing you can use, if doing this or identifying this is a little bit too hard, one indicator that you can use to identify that structure is the zigzag. Let's see if that's the right one. On MetaTrader, there's only one. So you don't have to worry about picking the right one or the wrong one. So I like using this one. So you can see that now if I take Fibonacci off and I take my drawing off, it'll show you those higher highs and higher lows, or lower lows and lower highs. It'll show you the movement in the market. So when you look here, if you look at these 3 points here, that's your first high. You look at this point here, is this point pivot here lower than this pivot? Yeah. So now it's in a downtrend, because an uptrend is a series of higher highs and higher lows. This is a lower low. So now it's not an uptrend in this moment. You see your higher or your lower high here, and it confirms the downtrend. So just a side note as far as market structure here. When you're in the moment, you're seeing that this has been an uptrend for the longest part. The way you confirm the downtrend, at least using the zigzags, is you would wait for, let me move this out the way. You would wait for this to show up here. So let me zoom in. And let's do a replay. Oh, let's exit that. Let's do a replay of that so you can see what I mean. And then, so watch what the zigzag does in the live replay. So right there, the zigzag confirmed that this is a low now when that popped up, when the line popped up, that this is a low. When the market continues on, that popped up there to determine that this is now a high. When this shows up, then you know that you're in a downtrend. As long as the zigzag doesn't do something like this, where it does a higher high, you're in a downtrend. A higher high followed by a higher low, because you want 2 confirmations with anything that you're trading. So as long as that doesn't happen, you're still in a downtrend. So let's delete that. So because you're in a downtrend, what are you going to do with your Fibonacci? You're going to, at this point, you got your low here. You know this is a low. It's probably going to zigzag's going to show this on the next candle, but you see how that just rejected off of that. So that's another low. So you would take your Fibonacci and go from your relevant high to your most relevant low if you're looking at a downtrend. Now, what points in your Fibonacci make sense to identify? What points? Oh, not that. You're still here. you would see that there are two major points that have the most respect from price. The first point is, again, the 61.8, which to happen a lot of the time. And then the second point in this instance would be the 78.6, because you have, these respects in here. So those would be your 2 points. So now if you're looking at this market live and you still see that, it's still an overall downtrend, even though you got upward momentum, you would look for your trades to do something like this. Whether you got that going on, or you got this going on, or if you're going beyond it, or you got something like this. Now, just because you identify where you want to take a trade, you don't know that if that's going to make sense, because these are just points that you've identified. The market hasn't identified those points, but you've identified those points. So you're waiting to confirm what you are seeing. So you see here, you got some reaction. Maybe you took a trade there. But in this regards, see if that stop loss was hit. So it barely kept it from the stop loss. But even this trade or this trade, either one of those trades, they both would have not got stopped out. And what I'm using, so like the reason I chose like these stop losses here, for example, because we go back with the Fibonacci. So we go back with the Fibonacci. And what I like to do is, now this is gold, so it's going to be a little bit different, but I like to do maybe, 10 or 15 pips from the next Fibonacci up. Something that I like to do personally, those are good levels. Or if I see something like this, I may put my Fibonacci slightly above those wicks over here, just as another barrier. If I'm up here, maybe there's one more Fibonacci that I haven't shown. And that is this one, the 88.6. I just know it, I use Fibonacci so much, I just know where it is without looking at it, without it being there. But 88.6, maybe 15 pips or 20 pips above that zone. Or if you're trading on a smaller time frame, maybe 5 or 10 pips above that next Fibonacci. So now I have a analysis, I have a plan, and I see that doji happen right here. I see the doji happen, and I'm just waiting for downward momentum. Now, if you're looking at this live, you would see that, the markets are going down off of that zone. Like maybe if you looked at the 15-minute, you see this engulfing candle here. So that would probably be your confirmation for the trade. And you would just ride it down. But you identified those points based off of Fibonacci. It made it simple for you. You found what 2 points to play off of, and you focused on those 2 points. Because you're able to focus on those 2 points, you had an effective game plan for when price got there. That's how you use it. So hopefully this is making sense and helping a lot of people really understand the market, because when I got this aspect of it, like especially yesterday and today's lesson, and combined them, it became very, I guess, easy for me to identify where I want to play in the market. I'm not looking at random price levels or random candles and just making a guess. I have a plan. I have a target. I have a play zone, whatever you want to call it. When the market is in range of my zone, I know where those things are. And like I said in the last video, clarity is the biggest ingredient to your trading strategy. If you have a lot of clarity in your trading strategy, you're going to win more times than not. You don't have to have the best trading strategy if you have really good clarity. So let's look at, now that we got the Fibonacci retracements in, let me go back to the extensions that I briefly went over for the Bitcoin example. So extensions are used primarily to see either reversal points, potential reversal points in the market, or potential take profits. Those are the two, I guess, uses of a Fibonacci extension. So possible used to find possible reversals or possible take profits. Let's see, I cannot spell it. There it is. So that's what you use Fibonacci extensions for. Now, the easier way to use Fibonacci extensions is just to add it to the Fibonacci retracement. And let me change it up. No, not that. Move this out the way. Here. There we go. So you have, I'm going to have to go further back. Let me go further back so you can see it. All right, here, perfect. So you got your Fibonacci extension. We're using it to find possible, in this case, possible take profits. Let's say you took a trade, you identified this point here. You identified this point here at the 61.8. Let's say you took a trade there, right? That's where you took the trade. You had your stop loss at the next Fibonacci. In this case, I'm not going to go over the 71 Fibonacci. That's an advanced one, but we'll cover that towards the end of the boot camp. So now in this case, your Fibonacci would be, your trade would look something like this. That would be your trade. Be something like that. Now your first Fibonacci zone, this is going to be a good lesson too. Your first Fibonacci zone for extension would be the 27. And you see that the market, got a reaction up there, but the ultimate, like if you could really map out where your Fibonacci is, the ultimate goal of a Fibonacci trade is to get to the other 61.8 extension. So you see how when it got to that point, the market had a perfect reaction from it. That was the maximum that move went. And a lot of times, if you find that correct move and it gets there, you've done a solid job and you take that profit. Now, don't try to get, that's the negative 61.8 is greedy enough. A lot of people go for the negative, the 27. But if it gets to that 61.8, you have done a solid job in your trading. But you see, look how crazy this is. This negative 27 that I drew down here was the same Fibonacci as, let me go back, as the 78.6. The same, or 61.8 here. The same line. That's how aligned Fibonacci is. when you really start to put it together, that's how aligned it is. Even just to play around just one last time with it, if I go here, go from one zone to the next. Let's move that out the way. So that same extension is around the level of the 38.2, which is another powerful zone. So when you put different Fibonacci's on different legs of movement in the markets, they line up. They line up. So hopefully, you know, after a few times of maybe watching this, you'll really get it. And when you really get it is when you apply this to the chart and practice it on your own. Take different movements in the market and throw some Fibonacci's up there. So like, say if I did this one here. Say if I did that one, went back to my extensions. And back to my extensions, look at what happened. Like they always line up. When you can find points where multiple Fibonacci's line up, you got a strong zone. You have a strong zone. But all in all, you know, that concludes today's lesson in Fibonacci, the secrets of nature and Forex trading. So I hope that you got a lot of value from this. You know, you're starting to see that you could really game plan these markets. And when you see that you can game plan these markets, then these markets are not so scary to you because you know what to do.